But I think, as you said in the opening, we don't have an expectation that there will be major breakthroughs. But honestly, we don't think that that should be the purpose of the session either. I think the 50th anniversary provides an opportunity for us to reflect on the relationship in the past 50 years, the value it has created, but also perhaps an opportunity for us to really realize that we are in a situation right now where we need a new model, a new platform for collaboration, if we are to avoid a continued increase in tension as we are seeing right now. So that's what we hope really comes out of it. That is that the two sides, they realize the seriousness of the situation and realize really that we are on a burning platform if we are to avoid further deterioration down the road.
These are two huge trading partners of the United States, of course, each still working on their own trade deal with Washington, but there is extensive friction between China and the EU. The European Union believes that China is a key enabler of the Russian war. We're also watching this no-limits partnership that President Xi Jinping has with his Russian counterpart, Vladimir Putin. Then there's also the trade imbalances and the overcapacities. In terms of these extensive frictions, which do you think they're going to be addressing? Which first? Is there a priority?
I think Ukraine has to be at the very top. Russia's war of aggression on Ukraine is an existential matter for Europe, and as we have seen many times before, security trumps the economy. That being said, we expect that trade will also figure very prominently because, as you mentioned, trade imbalances have continued to grow, and they're actually accelerating. We have had now 32 consecutive months of producer price deflation in China. We have had a devaluation of 10-12% of the renminbi compared to the euro, which adds fuel to the fire. Right now, we are in a situation where every time Europe exports one container to China, China is exporting 4 containers to Europe. We have seen over the past 5 years that whereas the Chinese economy has grown perhaps 35%, European exports in volume terms, in container terms, have actually decreased by 29%. We have to ask ourselves, how can it be that when you have an economy growing by 35%, that exports are declining by 29%? I should mention that is incidentally the same number for United States. Exports to China are also down by 29%. For Japan, it's 27%. Basically, all countries trading in manufactured goods have seen their exports to China decline over the past 5 years. And that suggests that it's a structural, a systemic issue that countries are dealing with here.
The EU is marking 50 years of diplomatic ties. I know that the EU Chamber of Commerce is marking, I believe today, the 25th anniversary of the Chamber. So congratulations there. I want to ask, what is it that EU businesses want out of this summit? We've seen how Chinese companies enjoy broad entry into the EU. What kind of experience are EU businesses having when trying to do business in China?
We continue to have issues with market access, trade barriers. We saw in our latest business confidence survey that 67% of our members, they told us that they have been losing business opportunities because of market access restrictions, and that figure is too high. We are seeing continually statements from the Chinese government that there is a commitment to continue opening up and reform, and we do see opening up in some areas, but we also see an added focus on the security agenda, and that focus on the security agenda on localization is something that is creating issues for many of our companies. So that needs to be addressed. And then, of course, we have the whole situation about export controls on rare earth and on magnets. And that is, of course, something that has created concerns for our members. How reliable is China as a supplier for European businesses? And if there's one thing we need as businesses, then it's a clear line of sight. We need to know what tomorrow looks like if we are going to invest significantly in China. And there is increasingly doubt about what the future looks like. So our call to the Chinese government is, let's get back to what used to be core strength of China, this reliability and predictability that sort of reassured investors that there was money to be made and a stable environment here.
The EU has continued its commitment to China, as you just outlined there as well. Do you still see the Chinese market, place of 1.4 billion in population, as a great opportunity for the European companies?
I think in the longer term, most, if not all of our members see a long-term potential in the market. We still think China is going to grow, but there's no doubt that in the near term, similar to Chinese companies, a lot of our members are under a lot of stress because of what the Chinese term involution. You have this overcapacity situation where manufacturing output is growing faster than consumption growth, leading to margin erosion, idle capacity, and pressures to export. So for a great many of our members, this year, as last year, are quite difficult. We are seeing now that 70% of our members are having higher margins or similar margins outside China as compared to inside China. So that is a concern. So in the near term, yes, we are quite concerned, but in the longer term, there's a high level of trust, belief in the Chinese market, and European businesses are here in China to stay.
Right, and on this note of future prospects too, with China and the EU having these tit-for-tat reciprocal restrictions for the past year now, where do you see that going? Can we expect any resolution soon?
Well, that's the thing. We think if we don't begin to have these discussions about how we distribute the benefits of the bilateral trading relationship in a more equitable manner, then we are going to see a continued increase. And we, of course, want to avoid that. So we think the time is now to sit down and have these discussions. There is a clear perception in Europe that the benefits are not distributed equitably, and that somehow needs to get addressed. Otherwise, I think we will be looking at continued sort of tit-for-tat. Every week a new measure taken, and I don't think that that's in anybody's interest. So the call from our side is for the two sides to sit down and iron out. We have seen China itself have been very concerned about its own industrial resilience. Just in May, both the Premier and the President have been out calling for establishing complete industrial supply chains, increasing self-reliance, increasing self-sufficiency. We don't think Europe needs to go that far, but we think there needs to be an understanding in China that when industrial resilience is at stake, when economic security is at stake, Europe will need to take its own precaution, similar to what China has done, even though I don't think that Europe will ever go as far.
Right, and with the EU negotiating or being close on a 15% tariff deal with the U.S., and of course the U.S. negotiating with China, and now the EU and China having talks, how does the EU or how does the U.S. impact EU-China ties now here?
Of course, there is an impact on the EU-China relationship from what is happening externally. But I think it's very important to stress also that it's important that we look at the EU-China relationship on its own merits. And I think one of the challenges in the past is that both sides perhaps to some extent have had a tendency to look at the bilateral relationship through the lens of other relations. And I think there needs to be a recognition that Europe and China have their own legitimate concerns in respect to the other that needs to be addressed on its own merits. So yes, it will impact, but I think also we need to look at the very specific particular aspects of the bilateral relationship, independent on what happens in Washington.
There are European companies looking at China, but also European companies operating in China concerned about market access and the trade barriers that you talked about. So are there any conflicts between sort of what European companies on the continent want versus European businesses operating in China on the ground?
Yeah, there is a little bit, of course, not always aligned in interest there. We have seen that China has been very focused on encouraging companies to move their manufacturing, their production to China rather than exporting to China. And of course, when you look at the benefit case for Europe, that's not quite the same. If you buy a European car in China today, maybe 95% of the value creation remains in China. whereas if you buy a Chinese-made car in Europe, a low single-digit percentage of the value creation goes back to Europe. So you can see there is an imbalance there. And I think also we need to recognize that it does actually matter whether you are a European subsidiary in Europe or whether you are an exporter based in Europe. And I think as European companies in China, we need to be sensitive to that, you know, not all business is equal in terms of how the value added actually flows back to society. We, of course, believe strongly and also think there is evidence that what we do as European subsidiaries here is to the benefit of Europe, but there also needs to be a consideration for employment in Europe, for R&D in Europe, for local supply chains in Europe, and so on. So we need to take a holistic view and ensure that stakeholders in Europe and in China arrive at models that work for both sides.